Gilbert experienced a 41% increase in this metric, which to me means the market is heated up. I've got Kristi Kenney here. We're going to talk about the market update for Gilbert, Arizona. So let's jump in and share with you what things are looking like. My name is Scott Wynn. I'm with the Wynn and Egan team at Neo Home Loans. And as I mentioned, I'm here with Kristi Kenney.
Good morning.
Kristi Kenney is with K2 Homes, ProSmart Realty, and has provided the real estate data and will be giving her take on the market. So where are things at right now? Well, what I do is I take a look at each metric and kind of put an indicator on whether it's a hot metric, a cool metric, or a balanced metric, and giving us an overview of where the market's at currently. Currently, Gilbert is looking like a balanced market. So Kristi, I'm curious, from your perspective, what would you say is the state of the Gilbert market? And are we experiencing a balanced market?
That's a really good question. It really depends on the city, and we're talking about Gilbert. So looking at the overall big picture right now, experts are saying that we are in a balanced market, that we are in a seller's market.
Okay.
However, Gilbert has had multiple offer situations on certain properties, and they've also had seller concessions. So, are we in a balanced market, or are we in a seller's market, or are we still in that buyer's market? Right now, I would have to say we are in more of a seller's market in Gilbert, because the inventory is so low. And the buyer demand is still very high. And I think this spring will show the most increase in buyers. Therefore, we will definitely be in a seller's market. So we're inching our way into a seller's market in Gilbert as we speak. But right now, I think we are still kind of right there at the balance.
Sure. Okay.
Makes sense?
Yeah, definitely. There seems to be a lot of mixed signals in terms of the market. And I think it's just because of all the dynamics playing in. So let's look at kind of the high level of these, and then we'll dig into each one. So months of inventory currently sitting at 2.6 months, indicating that that's more of a hot metric. 92 days on the market, 224 sales last month at a median sales price of $520,000. Sold to list ratio, and again, we'll dig into this a little bit more on what these mean for you individually, but 97.7% sold to list ratio with seller paid closing costs. 54% of sellers last month provided seller paid closing costs, pretty significant, and to a pretty decent degree, $10,000. So again, we'll talk more about what that means here as well. And I think this is probably the metric that's causing the most softness in terms of buyers, which is mortgage rates being up 0.5%. But let's dig into each of these here. So let's start with months of inventory. What's your take on this? I mean, clearly we saw an increase as rates started increasing, kind of leveled out. But I mean, last month saw a pretty significant drop, down 1.3 months from the month before. What's your thought on months of inventory there?
So again, we're kind of in this situation where home sellers do not want to sell their home because they are rate locked right now at a 4% or a 3%, right? So being rate locked in means that they're not willing to go out and look for another home that's going to put them in the 6% interest rate bracket. So we're kind of on hold with a lot of sellers, but buyers are out there and they're demanding homes. They're needing homes. They're wanting homes. And so what's happening is the inventory is super low. The buyer demand is high. So they're coming out. You'd think that the houses would fly off the shelves, right? But they aren't, because the interest or the, what am I trying to say? The
mortgage rates, is that what you're talking about?
Well, not the mortgage rates. They're coming in at 6%, but I think the overall their sellers are still looking at their homes as being 2020 or 2022.
Oh, sure.
And so they're pricing them a little bit on the higher side still. Yeah. And buyers aren't buying into that right now. So that's why they're sticking on hold for as many days as they are. What is the average price or average
like right now, days on market? At 92, and we've seen a steady increase. And I think that's kind of an interesting metric here, because at least from the non-real estate professional side of things, I would think that if inventory is low, which again, a balanced market is 4 to 6 months, right? If we're sitting at just 2.6 and that's low, I would expect days on market to be decreasing because they'd be selling faster. So why do you think that continues to rise?
They're overpriced. The houses are overpriced, not by a lot, but a lot of consumers are thinking that the houses should have dropped a lot more than they did. Sellers are thinking they can still get a lot more for their home in the 2021, 22, 23 years or 22 years.
Right. Well, you can even see like the months of inventory just a year ago was sitting at 0.7. So, I mean, we're over triple that. So it's not the same environment that we experienced. So exactly that, right? Sellers might be just holding out, hoping they can get more for their home than what they can actually get. And we can talk a little bit about that in terms of price and number of sales here. I mean, we see sales per month going up. We're starting to see that tip up a little bit. We saw it cool down for quite a while. But we're up 65 sales from last month from 159 to 224. And we're starting to see home prices seem to kind of level off. We saw that decrease as rates went up and buyer demand decreased. So any thoughts in terms of the jump in the sales per month over last month? I mean, that was the biggest metric mover in Gilbert last month.
Well, and typically you're going to see, November, December, very slow in real estate as far as buying and selling. January is it starts taking off. It's still slower, but mid-January, that's when everyone says, okay, it's time to either, sell or buy, or let's talk about it. So it's starting to pick up. So you're going to see probably in the next month that the inventory is definitely picking up, and that the home prices are starting to settle, and you're going to see that the days on hold or days on market are going to be coming down as well. So you're going to start seeing that as long as we can possibly hope for, and that's your world, Scott. The interest rates hopefully coming down a tad bit is going to help the overall situation of the gridlock that we're having right now.
Yeah, for sure. Well, let's talk a little bit about like the willingness of sellers to negotiate. I mean, it's pretty clear based off of these two metrics that sellers are open to at least negotiating, or that they've maybe figured out that they have to negotiate in order to get their home sold.
Yes.
Sold to list ratio currently sitting at 97.7. It's up a little bit over last month, 0.8%. But that really indicates that when a seller lists their home, they have to be willing to come down off of that price in order to get it sold. And on top of that, if we add in the seller paid closing costs, I mean, 54% of sellers gave a concession to the buyer to help them with their closing costs to the tune of $10,000. And so you can see that's increased since rates have started increasing. So, I mean, that to me tells me definitely some room for negotiation on the buyer side, right?
Absolutely. Yes. And so there's room. It's nice because there's room right now. I just put I put a buyer under contract with a 4% seller concessions, and that's huge. That's a big, and we came in at list price, but we had 4% seller concessions. So obviously that brings down the price by about $13,000.
Yeah. So it's kind of a mix between these, right? You can kind of play with these. Maybe you're willing to offer full list price, but you need more seller concessions, or maybe you don't need seller concessions and you just want a better price. Different ways to kind of play with that.
Yes.
So that kind of brings us into the world.
Kind of fun.
What's that?
It's fun because there's a lot of negotiation going on right now.
And I think that's what's unique about buying a home, is that every person's situation is situational, right? For some buyers, the price is the most important. And for others, it might be the closing costs, or maybe it's a payment sensitivity because interest rates are so high. And so kind of want to share some strategies about what's going on with mortgage rates and where we think they're headed, and then how to utilize this to position you to get the best possible situation. So here's the kind of chart of mortgage rates over the last year. Now, depending upon where you look, you get different interest rates. And so interest rates right now are somewhere between, I don't know, mid sixes to mid sevens, depending upon where you look. And it also, of course, depends on so many criteria: credit score, down payment, loan product, home product. There's so many. I think there's something like 35 different things that go into identifying what your rate will be. So that's why I don't think it's important to look at a specific rate, but rather just the general trend of where rates are. And one of the things that's missing from a lot of these online rates, if you look, is what's the cost to get that rate? Right now, it's a very different interest rate environment that, yes, you might be able to get 6.65 or 7.362, but you have no idea what that cost is. And of course, the cost is going to be higher on a lower rate than it is on a higher rate. But generally, the trend is up, especially over the last year. We're up 2.89%, up 0.5% over the last month. But here's the thing. The forecast is that rates are headed down. And the reason why is because mortgage rates are tied to inflation. The Fed is doing everything they can right now to reduce inflation. So as inflation reduces, what we can expect is that mortgage rates are going to go down too. And so what's that going to do? Of course, as mortgage rates go down, homes become more affordable. And as homes become more affordable, you're going to see a flood of people returning to the market, and you're going to see more sales, which is going to drop the inventory even further, reduce the days on market, and decrease the seller's willingness to negotiate, right?
And then we'll be in a seller's market completely.
Exactly. So how can we use this information to benefit us now as a home buyer? Well, we know sellers are willing to negotiate now. And the reason is because there's not too many buyers because of mortgage rates. So here's one thing we're doing right now is we're offering a certainty guarantee. It's allowing our buyers to enter the market at a time where they have more negotiation power and get the best of both worlds. Yes, if you buy now, you're going to have higher interest rates. But here's where the certainty guarantee comes in, is if rates drop in the next 2 years, we will refinance our buyer's mortgage to take advantage of those lower rates. So before all the buyers flood into the market, buy now, use that negotiation to get a lower price, get some seller paid closing costs, maybe use those seller paid closing costs to do like a temporary buy down. So you get a lower rate temporarily paid for by the seller. And then when rates drop, we can lock that in permanently into the future using that certainty guarantee. Do you have any thoughts about that certainty guarantee or how that may work in the market?
I think that's awesome, Scott, that you're offering that because there's so many people that are on hold right now, so many sellers that are on hold and buyers both, but more sellers because they're in that rate locked situation where they're just afraid to make a move and to buy something now if they do sell their home because they're not sure where the interest rates are going to be, et cetera, et cetera. So offering that type of a guarantee is comforting to know for the consumer, to know that, okay, if we get into something, and rates are going to be coming down, that you will go in and offer them, a refinance and get that rate down as low as they can to lower their payment, et cetera.
I guess the point is that there's opportunity in every market, right? Whether rates are high, prices are high, the market's moving up or down, it doesn't really matter. There is opportunity in every market. And so the opportunity right now is the fact that buyer demand isn't quite there. The sellers are willing to negotiate, and we expect rates are going to drop. And so you can take advantage of that. And so that's one of the things that Kristi and I truly believe in is making sure that we're aware of what's going on in the market and where does the opportunity lie so that we can help you, whether it's time for you to sell your home, buy a home, or refinance a home, which brings me to the point that we would love the opportunity to meet with you in person. We do Zoom calls to discuss your particular situation and identify what's the best strategy for you, whether that's to stay put for now, to buy and sell, or whatever it may be. So please know if you're watching this, we do focus on the entire Southeast Valley. We cover Chandler, Gilbert, Mesa, Tempe, Queen Creek. If you live in the area and are curious about what's going on in your particular city or zip code or considering purchasing in these areas, please let us know. We'll be happy to provide that real estate data to you. And again, the offer stands. If you're looking to buy, sell, or refinance, let's meet in person. Thanks for watching.
Thank you.